biggest risk in all of this, Cody. The biggest concern that I have in sharing this with people is if you raid the piggy bank. So I've got
Mm.
an acquaintance, and I use that term very loosely. At one point, they were part of the Watch of the Month Club, and they had a car lease payment of $1,300 a month. Now, the family does just fine. I could care less what they spend it on. But if you got them in a corner and you ask them why do you spend on some of this stuff? It doesn't take long to get to the truth. To impress our circle of friends. And see, the problem with that is that there is no end game to that.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the Real Estate Pros podcast. I'm Cody Crabb with Investor Fuel, and today I'm joined by Howard Polansky, founder of Financially Led. Howard specializes in helping high-income professionals, folks like dentists and people like them, optimize their cash flow so they can invest in stuff like real estate. Instead of just focusing on earning more, he helps people unlock money they've already got access to and help them put it to work. So, Howard, thanks so much for joining us today. We really appreciate it.
Yeah, thank you, Cody, for the opportunity.
Sure. So let's just diving in right away. I'm curious, when you say optimize cash flow, what does that actually look like in real life?
Yeah, so the way that I first focus for people in terms of looking at their personal finances, or if they own a business, is looking at their fixed debt payments and saying, is there a way for us to rearrange how we're paying those off so that that payment that's going out every 30 days is now gone sooner, faster, more efficiently, so that that money that's been going out now stays in your pocket?
So when someone comes to you and you're working with them, what is typically going on financially with them? Like what's their situation?
Well, most of my clients are dentists because in my past life I was a dentist. So they have student loans, a lot of student loans.
Sure,
They've
yeah.
got a mortgage, they've got cars, they've got a practice loan, they've got dental equipment that they're financing. And so, yes, there might be a lot of money running through their practice, but there's a lot of expenses going in all sorts of places. And frankly, and I'm making a very broad stroke about most healthcare professionals, they have no idea where the money goes. And so,
well, yeah, they're focused on the
I'm-
other stuff. Yeah, I see what you mean.
well, and you have the doctor lifestyle and the doctor
Sure.
stigma in terms of having to live up to this lifestyle, but then they just have no idea what's happening. And so it starts with just tracking.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Then seeing where I call it the money boulders, which is those debt payments, and saying, yeah, you've probably done very well. You probably have some assets that have appreciated. And can we utilize these assets like a multifunctional tool, something like a house and getting a home equity line of credit to be able to play this arbitrage game to get rid of that fixed, let's call it a fixed car payment, swing it into the line of credit. Now, all of a sudden, the payment comes down. Now you have more money.
Okay, so let's frame this in a way that our real estate investor audience could maybe take advantage of it. You mentioned arbitrage. Can you just kind of break that down for me in simple terms? We get people across the board as in terms of experience here, so I like to kind of keep it simple for those starting out.
Yeah, absolutely. So let's start with thinking if we were a bank, okay? We own a bank. We're trying to get people to deposit their money in our bank. So we might say, hey, we've got a savings account that you can earn 4%. All right. Now, you have to remember, from a bank's perspective, that's a liability. It's costing us 4% for you, Cody, to keep your money with me. But what do? I'm taking your money, turning around, and then giving you a mortgage at 6.5%. That difference between 4 and 6.5, that's the arbitrage.
I see.
Okay. Also known as a spread. So now let's take this concept. We have this line of credit. We have this availability of cash that we can use, that we can invest in a real estate opportunity, but it might cost us 8%. So it would only make sense to do this if we're borrowing at 8, but we can earn 10, 12, 15% and make the positive spread in our favor.
Interesting. Okay, so this is kind of an interesting way to look at it because from this perspective, it's like the risk is so much lower for the people that are actually doing the investing.
Hopefully, yes.
Yeah.
And so this is why I tell my clients, like, there's no reason to rush, because at worst, as we're paying down this debt, it's a guaranteed cash on cash return. But when you do find an opportunity where you're like, oh my God, this is a slam dunk, where do you get the money from? You pull it out of the line of credit. But most importantly, they know how to pay themselves back. So it's one of those, you're waiting for the opportunity, you can deploy quickly, and then you know how to reload or restock to find the next opportunity.
Gotcha. Okay. So someone, like I said, we're keeping this in terms of like real estate investors. So let's say a real estate investor is looking at how can they use this framework, kind of line of thinking when they are looking at a deal or looking to expand or anything. I'm just kind of trying to put it in terms where maybe it's more applicable,
Sure. Yeah. I mean, when you say a deal, or I just want to be clear, are you talking about like a single family home or more like a syndication?
Either one, but let's just put it in terms of like a single family home, just
okay,
for the ease of the example.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, so it's one of those that, let's just say, the normal market rate is $250,000 for a house, but you find a house available for 180. You're going to have to put some elbow grease into it, okay? But you have set yourself up with a $150,000 home equity line of credit. Well, what can you do? You can pull that money out of the HELOC and use that as a down payment to purchase this new home, spruce it up, and then from the rent and the cash flow from that, then you can start to pay it back. And you now have the second asset, which hopefully you have a forced appreciation. And eventually, with the right bank, we're in Texas, the rules get weird, but with the right bank, we can get another line of credit on that new single family home.
Gotcha. Okay. So if someone wants to start kind of freeing up capital, what would be like the first step in order to do that?
The first step, in my mind, is to start looking at your fixed debt payments and saying, it's not in terms of the Dave Ramsey of the highest interest rate or the biggest balance or the smallest balance. I don't care which one that is. It is what is the highest payment compared to the balance remaining. So, and here's what I mean is imagine that you have two debts. They each have a $500 monthly payment with them. But one of them, the balance remaining is $8,000, and the other one, the balance remaining is $80,000. If you could only pay off one, Cody, which one would you pay off first?
Instinct tells me the lower one.
Right. Okay. Because it's a smaller balance compared to the size of the payment. And so this is the way you start to arrange your debts is look at payment compared to balance. Figure out which one of those is going to give you the best bang for your buck or the best cash on cash return. And then compare that to what is out there in the market. And if it makes more sense to invest in the debt and pay that off, go for that first. But once you find that opportunity, go for the opportunity.
Gotcha. This is a good way to start thinking about things because real estate investors specifically always have a few different they probably have multiple sources of debt that they should be looking at. So that's a really smart way to look at it. I've never really thought about that before. So what's a way that this can go wrong? I mean, what situations should someone not think about their money this way? I know that obviously every situation is unique. Every situation has their own pros and cons and things. But I'm curious, like the way that you're viewing this seems like there could be a downside. I'm curious if you see one of those.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, I mean, specifically around lines of credit, I say that there's 4 big risks. One is your income has to be greater than your expenses. If not, this will not work. It's just math, period, end of story. Number 2, people get scared about a line of credit having a variable interest rate, but when you understand the whole strategy in terms of utilizing all of your income and not just trying to pay the minimum payment, it's not that big of a deal. Number 3, lines of credit can get closed, and this is the reason why I don't like working with the mega banks. Mace Bank, Hell's Cargo, Crank of America, Capital One. Stay away from them because they're the mega banks. And when they make a change, it's going to sweep nationwide. It's not really looking at your specific situation. Versus community banks, regional banks, credit unions, they're much more lenient, provided you're being a good steward of your line. But the biggest risk in all of this, Cody, the biggest concern that I have in sharing this with people is if you raid the piggy bank. So I've got an acquaintance, and I use that term very loosely. At one point, they were part of the Watch of the Month Club, and they had a car lease payment of $1,300 a month. Now, the family does just fine. I could care less what they spend it on. But if you got them in a corner and you ask them why do you spend on some of the stuff? It doesn't take long to get to the truth. To impress our circle of friends. And see, the problem with that is that there is no end game to that. So if I showed this couple how to try and do this, They would start it, they'd raid the piggy bank, they come back to me and say, Howard, this doesn't work. I just look at them and say, no, you're just an idiot. You're an idiot that happens to make a lot of money, but you're still an idiot. And so if you intend to use this to just up your lifestyle, please don't even begin with this. If you're looking to do this to strategically leverage assets, but you have the diligence and you have the wherewithal to say, I understand debt is leverage. And I also understand leverage can go badly. And be smart with this. It can work extremely well in your favor.
Yeah, it sounds like a great way to frame this. Howard, thanks so much. This is, I think, something like a little change in how you think about something can completely change the outcome. Sometimes, think about the money they have already before you go chasing new things and things like that. So, if anybody wants to connect with you or learn more about what you're doing, where can they go online to find you?
Yeah, financiallyled.com is the best place to go.
All right. Sounds good. Well, Howard, thank you so much again for joining us and our audience of real estate investors. And if you in the audience found this helpful, and I'm sure you did, go ahead and hit subscribe on our channel so that you can get notified of future videos, and make sure you are subscribed to us on Apple Podcasts and leave us a review as well. Thank you so much. Howard, once again, appreciate you coming on, and we'll talk to you next time.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.